Go. Good morning. It's 9:08 a.m. on Tuesday. I believe it's 25th of August. Quick update on the V3. As I mentioned to you guys in email last night, Microsoft has assigned a special VM, virtual machine app server guy Nader to see what's wrong. I don't know if he pulled the strings or not. I don't think he wants to go to Scott Guthrie. Now he's number 2 at Microsoft. He used to work for him. He wants to make it work himself. I said, fine, but Nader, you don't have a lot of time. And I told him, buy the damn SSL from what do you call it? From Microsoft. Boom, they'll make a good idea will refund us. And they made enough mistakes the last couple of weeks, they'll refund us. That's not, plus you have 30 days. So we're waiting for that. In the meantime, life will go on, work will go on. We can't just sit here waiting. And we did okay yesterday, so. All right, let me center these. Okay, so. Okay, there we go. All right, let's start with PMT quickly. There was something else I wanted to do. Hold on. Yeah. Econ. Let's also do Econ. Let's bring Econ up too. We gotta go review that first. Hold on one second. Yeah, so it's Econ, PMT, and futures. This is what we're gonna do, right? Just very routine, very simple. 5-10 minutes. Nothing fancy. Just we want to go over it. Make sure that you guys are reminded. It's what it is and what we'll be doing. All right. Tuesday we have. Here's I use the Econo Day, something that feeds everybody else basically, including Bloomberg and everybody else. Consumer confidence coming up. Red dots are crucial. We have this house pricing. Just forget it. Case Shiller. We'll see. We'll see how that works. And I don't know anything about Red Book. I know it's retail, but retail is a toilet anyway. Right now. New home sales very crucial. And then we got veteran Fed. All right, so I will usually just open this up, take a look at what this estimate is. If it's one of the crucial ones that I like to trade, I print it out. So I know what to look for, read the commentary. So the consensus is a little bit higher. Look at the wide range though. So go back to the next one. Definitely want to look at new home sales. This is crucial. This should not be a good number either, yeah. Yeah. The third straight month in June has, which is the best since the subprime. Oh, really? Is that right? Okay, so new home sales will continue going forward. Interesting. Very resistant to virus issues. Okay. Just a second. It was the range is not too bad. It's tight. Okay. All right. Good. Okay. Those two numbers coming out at 10 a.m. together. So double the hour on the first try. So maybe we want to wait till then. We'll see. Okay. We gotta be careful. This two could be both very crucial. Then you got durable goods. Remember, this is the 4th week. So your option week, we don't have much econ data. But 4th week, you gotta have these. You gotta have GDP stuff. You gotta have jobless claims, of course. There's one more you get. You have Chicago PMI and sentiment. Sentiment comes in at the very last, correct? Because this is you have Michigan. You have PMI from Chicago. There's one more here. Durable goods, yeah. I'll pay a lot of attention usually to durable goods. That's the mainstay of the economy. I look at what GDP is saying, and the pending homes. Yeah, it's a busy next 2 or 3 days. So be ready, be here early. Yeah, there's going to be a lot of action then. All right, so having said that, let's go to our next item, PMT. Let's just review where we are compared to what we had going yesterday. Oh, here's the type of charts. So we had on higher than a new high end. So that means my PMT is in trouble. I understand that. Okay. But I have a good trade on. I'm in trouble with time and digest. There's a difference. I haven't traded on for clients. I will. I'm trying to get it up there. Maybe I shorted a little bit early here. I mean, remember I shorted in this shape and just reversed on me. But that's okay. That's okay. If I think what's going to happen is going to happen, that's a small price to pay to be in line. Remember, 4 days, 3 days, also. Last February went against me. Did I panicked? No, you can't. You can't. When you panic, you're not looking at a chart anymore. You're in your mind. You're traveling in your mind. Stop doing that. Okay. Okay, we bounced down here at negative 150. Okay. That's not oversold, by the way. According to Sharp McClellan, whose wife designed this, by the way. Yeah. Miriam, yeah, very nice lady. She passed away. Sharp says, hey, Barry, look for this number. 150 and below. That's the oversold area. 150 and above is overbought. Not at the 100. Some bozo wrote a book about it and said this is how you should use Sharp McClellan's indicator. So Sharp says, I know my indicator. That's how you use my indicator. I don't want anybody else to tell me how to do that. Hi, Nancy. Hopefully I sound a little bit better. The other day somebody had said I sounded drunk. I don't drink, so I don't know. Whatever. Let's see. What else do we have? We're up there. We have a little positive. The CIs are not giving us any conclusion other than very slow, because area under the curve. Remember that. This is an integral. We're computing the area under the curve. Slowly rising. But the CI diffs are absolutely neutral. It just cannot, maybe because we're too high up. Okay. The movement is very small, very tiny. So, we're heading to some overbought condition. Yeah, we'll see. Let's get to past 2 sigma. That's what's going to happen. This is an index. Index doesn't go past 2 sigma that often. So. Canaries. Okay. Well, transposition came up slightly. Held on to this center line, the 20 bar, which is a MA, 20 bar MA, which is the center line of a standard sigma channel on the Russell. Russell held on. This is good. It's not bad. We came up on transposition, a little more hopeful about the economy. Okay, that's fine. We still have not met new highs. Keep that in mind. DT, that's D trenders. That's focusing on what we just saw. Going in with a microscope, especially these two, you could see what the transposition did. His all-time high up there. And road bump up there on the Russell. And yes, on the 50, we're getting some diversion. That's early. That's normal. What's 3 probably more key to me is the trend for 200 day. This is for 50, this is for 200. Okay, which is the differential between that close and this white line. That's 200 day, and that close versus this line, the cyan. That is the 50 bar. Remember, we use constant colors in different charts for the same indicator. Constant. We don't look at how it looks pretty or not. That's not the issue. It's a cumulative learning that I talk about. It goes back to my early webinars. Cumulative learning. It's what you learn at each step of the way. So you miss a step, you're slowing down your learning. Don't fool yourself. Okay. I've got guys who come to those webinars. They may not do anything else with us, but they come to webinars for years and years and years. Well, there's Simon right here. Simon. He will miss one webinar. He will show up. Or Monroe. Monroe was always there, except not today. Yeah. He's being taken care of. He's probably having breakfast in bed. Unbelievable. When I grew up, I wanted to be like Monroe. Yeah. All right. Huge peak there in local area. Okay. That gives you the perspective because this is weekly. This is your daily. Well, 48, 52-week highs for S&P names only. So out of a possible 500, we're at 48. The peaks are the differential between the two, right? I'm sorry, no differential. It's new highs, yeah. They don't get to 200. I mean, yeah, they'll get to 200. They'll never get to 500. Yeah, not all of them are going to have new highs. But you will see, it's the last year, right, 52 weeks, you'd see probably 160, 170. I think we saw in April of 2009, like 180, 190. That's about it. We don't. And that's what we hit. We keep this. So if I do this, you'll see. This is historical. It gets further back out. You can see what these levels were. What was this? 148 up there, yeah. Usually what that says, that's a peak. Usually. So we're not there yet. Okay. But we could be getting close. We'll see. We just have to keep watching it. But look, we're getting solid greens. That's the beginning of that cycle. Let's start showing that. So this is daily, there's your weekly. Keep at it. Now the bottoms are usually when you get these peaks in the 52-week lows of the S&Ps. So, you can see what this was. Yeah, we knew the bottom was here, coming in. It's coming in. It's coming in. It's usual when. So you miss a day, you miss a day. We're not shooting for the peaks and valleys. We're shooting for trend. We gotta get the trend right, then this trend right. That's how you crush everybody on Time Digest. As Admiral would like to say. All right. We came back up on Momo. We did a little bit better on SP1. That's SP1. This was written for a hedge fund in New York. And good old days when everybody was go party hardy type. Yeah. Of course, this was right before the summer where everything went nuts in 2009. Yeah, this was done like in May. Yep. Hey up. Immediately we found out we'd have a little signal line for it. This is a signal line. It's a much shorter version of SP1. Becomes Momo, and we use that divergence tool. Okay. Everything is a signal line. You know, there's your CI, there's your signal line. All good designs have included signal line. Unfortunately, we could not put it up there. Okay. So we use a sigma channel to get a subjective value. Well, no, I should say, I said objective value of a movement within itself, you know, within its own regime. But the signaling line was a new construct to focus on this in a fast way, so that we could see divergences. And usually on the bottoms, for example, this is the divergence we want to see. The lows are put in, but higher lows. Guess what? And this is still dropping. Remember that. But, huh? This is still dropping, but this is telling us bottom is near. And guess what? Rotates. Oh. Remember, you the indicator that's early. Not indicator is late. Indicator late has no value. Indicator early now puts additional burden on you to how to use it. That means you got to hone in your craft. That's crucial. Your skills. Okay, VIX, same old. I'm not too impressed there. SQ. Hello, Murray. Okay, Murray. This is a problem. We've been going higher now. 147, Jack. We talked about the M. I was reading first as the M. I said, no. Then I went back and I see there's some similarities there. But this never came up like that. Oh, yeah, this is coming. The boys are going out there and making new purchases. Of what? Oh, SPX puts deep out of money. Deep out. That is way down here. And I'm saying, way down here, they're buying somewhere there. They're buying what? That's their estimate. They don't know to be exact. Getting closer because it's a lot of money. The delta is very low. Premium is very low. The only thing they're paying is time value. But as it starts moving down, that delta is going to explode. As it explodes, even if it doesn't meet the target, just the fact that it's still going. Before pull up, they got to pull out before they pull up. If it starts doing a W on the bottom, they're done. The value, the premium has already maxed out. So before that, as it's still falling, for example, let me go back to this chart. As we're in this phase, okay, they probably put it on somewhere in here, right? We get to this phase, they're going to try to cover out in this area. They'll never wait that long. Why? They made serious money that time. And now they're doing it in scale. Look at it. Boom. So I think it's going to be wild. This next few weeks, I'd say next 10 weeks, you're going to see a market you haven't seen before. I hope I'm wrong. Trade. I forget trade. TD. All right, there we go. Overbought. Hello, Murray. Overbought. How do I know this? I looked at these last night. I prepped myself. So I'm coming in. I know what I'm talking about here this morning, so chasing numbers. U and Z are lead now. So it's long U contract, which is SEP, and then these, which is December, is a short call. So that's what this is. We quoted it yesterday. All right. let's go to OTF and then wrap this up. Here's overnight OTF. Remember this, let's go here. It gives us a perspective of where we are overnight. Simply 30 minutes, a lot of big buddy guys like to look at it that way. Not shorter, because you'll get too many false positives. But this is where we are now. We've pulled back. When I was looking at the charts, it was about here. I'm going to do it relatively early. I had to get my sanity back. But look at, we got the 2 sigma stops, rotates. Cannot get through what 1 sigma, and then that's all she wrote. Not so pronounced in the ES. Okay. But you can see where we got. You can see CIs and CI dips. Crucial to look at that. Here's your NQ. Okay, beautiful run from one Bollinger Band to the other. You can't ask for anything better. And then a rotation since then. So those of you who hung on here since about 9:30, you made some touching. Very nice touching indeed. Okay. Machine ran, there was no faults, there was no hung up, internet was good. All in all, yeah, there's an issue. Alright, so this one says we still some ways to go. Oh, we have to mark this. Okay, I totally missed this, Jack. Hold on. Here's your marking. Here's your cross, right there at the cross. Okay, color change, yes. Notice the default is green. You have to have some color, and then you just change it as needed. Okay, there we go. That's that. Yes, same thing. Be a little bit more muted. That's all. Usually, yes. Oh, we have that's the MBS there. We have MBS too. Murray. We don't have. Oh, we have MBS too. Sorry. Okay, yeah. And here's your ES for you. Crucial pricing right now, because MBS is your bias above and below. You saw what happened yesterday. It was so crucial in NQ yesterday. Okay, that wraps up our issues here. Any questions for me? There's a question there. Let me see. No, I get a lot of messages here. Looks like there's a comment there for me. Audio is good. The far right candles. Yes, I know it's fixed now. Should be good now, Armando, because you can see the white bars. But thank you for reminding me, sir. Appreciate that. This wrapped up our recording. We'll